Hi students, welcome to DS Economics channel. Today we are going to discuss 2022 July Kerala State Eligibility Test Economics Previous Year question. This is your part number 2. In this video we are going to discuss from the question number 41 to 80. So those who come for the first time, please subscribe to this channel, and those who don't watch the previous classes, they can watch by the playlist named as Kerala Set Previous Year Question. I have already given the link in the video description. You got the playlist there, or you can watch by visiting on this channel. So this is your part 2. Let's start the video. Question number 41, assertion and reason. Assertion is Harrod-Domer model assumes fixed technological relationship between capital flows and income flows. Reason is the model assumes flexible capital output ratio. Here first assertion is Harrod-Domer model assumes fixed technological relationship between capital flows and income flows. This is right. Harrod-Domer model assumes fixed technological relationship. And reason is the model assumes flexible capital output ratio. No, this is incorrect. Reason is incorrect, but assertion is right. So here option number A is right, A is true, but R is false. How? Assertion is the model does assume a fixed technological relationship between capital flows and income flows. This means it assumes a constant capital output ratio. So this is right. And reason is the model doesn't assume a flexible capital output ratio, rather it assumes a fixed ratio. Here question given as flexible capital output ratio, but rather it assumes a fixed ratio. So reason is incorrect. So reason is false because the model assumes a fixed capital output ratio, not a flexible one. So your option A is right. Then question number 42, list 1 and list 2. First one is fiscal deficit, budget deficit, revenue deficit and primary deficit. So fiscal deficit, excess of total expenditure over total receipt less borrowing. This is called as fiscal deficit. Excess of total expenditure over total receipt less than borrowing. Then budget deficit, excess of total expenditure over total receipt or expenditure greater than receipt. It is called as budget deficit. Then revenue deficit, excess of revenue expenditure over revenue receipt. This is called as revenue deficit. Revenue expenditure is greater than revenue receipt. Then primary deficit, it is called as excess of total expenditure over total receipt less borrowing and interest payment. So excess of total expenditure over total receipt less than borrowing and interest payment. So fiscal deficit, excess of total expenditure over total receipt less borrowing. Budget deficit, excess of total expenditure over total receipt. Revenue deficit, excess of revenue expenditure over revenue receipt. Primary deficit, excess of total expenditure over total receipt less borrowing and interest payment. So A3, B1, C2 and D4. Option number A is the right. Then assertion and reason. In order to control inflationary tendencies, RBI raises the repo rate. In order to control inflationary tendency, RBI raises repo rate. It is right. When RBI raises repo rate, so the money supply in the economy decreases because commercial banks take less amount of loan from RBI. So money supply in the economy decreases. So it affects positive impact on the economy by controlling money supply. Inflation also control. So in order to control inflationary tendency, RBI raises the repo rate. This is right. Then RBI wishes to increase consumption and investment. No, RBI does not wishes to increase consumption and investment. This is incorrect. First one is correct. So here A is true, but R is false. So here option A is right. Then question number 44. what are the causes of market failure choosing the correct alternative? What are the causes of market failure? First one is asymmetric information. In asymmetric information, like moral hazard, adverse selection, market failure arises. So asymmetric information is right. Then second one is individual property right. No, when individual property right exists, there cannot be market failure. Then public goods with externality, this is also correct. In public goods, market failure arises due to externality. Then in private good, market failure doesn't arise. So in individual property rights, private good, market failure doesn't arise, but in asymmetric information and public goods with externality, market failure arises. So option number 1 and 3 are correct. So 1 and 3, the option number B. Then question number 45, Previs-Singer hypothesis relates to. Previs-Singer hypothesis relates to balance of payment problem of developing countries, terms of trade of developing countries, prevalence of poverty among developing countries, or inequality of income in developing countries. So we have to know what is the Previs-Singer hypothesis says. So according to the Previs-Singer hypothesis, it argues that the terms of trade for developing countries tend to deteriorate over time relative to developed countries, meaning that the prices of primary commodities that developing countries export declines relative to the prices of manufactured goods they import. So according to this statement, option number B is the right option. Previs-Singer hypothesis relates to terms of trade of developing countries, terms of trade. Then question number 46, which of the following is not an amber box subsidy? Amber box subsidy. So we have to know what is amber box, and so what is amber box subsidy? Amber box subsidies are those that are considered trade distorting according to the World Trade Organization or WTO rules. They include subsidies that support agricultural production or affect trade by increasing the volume or reducing the cost of agricultural products. So among the given option, first one is minimum support price of cereals. So this is an amber box subsidy as it directly support agricultural production by setting prices. So minimum support price of cereals include in amber box. Then subsidy on seed, this is also an amber box subsidy as it supports agricultural production, subsidy on seeds. Then third one is subsidy on irrigation rates. This is an amber box subsidy because it reduce production cost for farmers. Irrigation rates, subsidy on irrigation rates, it reduce the production cost for farmers. This is also included under amber box related to agriculture. Then fourth one is cost of government pest control and management. So this is generally considered as a green box subsidy, not as a amber box, as it supports agricultural production, but it is not considered trade distorting, or it is considered to be for public goods. So option number D, it is include under green box. It's include under green box. So it is not included in the amber box subsidy. So here option D is the right option, because option A, B, C all are included in the amber box. So option D is not in the amber box. Then question number 47, the chairman of the 15th Finance Commission, last Finance Commission chairman, that is Nand Kishore Singh, N.K. Singh, 15th Finance Commission chairman Nand Kishore Singh. 47, option number D. Then question number 48, housing finance company is considered as non-banking financial company, specialized banks, local area banks, none of the above. Housing finance company is considered as non-banking financial companies or NBFC, housing finance banks. So housing finance banks are financial institutions that provide loans for the purchase, construction and improvement of residential properties, and they operate as an non-banking financial companies under regulation and specific to housing finance. So housing finance companies considered as non-banking financial companies. Then question number 49, which of the following institutions collectively called as market infrastructure institution or MII, market infrastructure institutions? The first one is stock exchange. Stock exchange include in market infrastructure institution. Then depositors, it is also include stock exchange, depositories, then clearing corporation, then National Investment Infrastructure Fund. No, this is not come under the market infrastructure institution. Under market infrastructure institution, stock exchange, depositories, clearing corporation are included. So option 1, 2 and 3 are correct option. So market infrastructure institution, it includes organization that provide essential infrastructure for the smooth functioning of the financial market. So these typically include stock exchange, depositories, clearing corporation. So the National Investment Infrastructure Fund, last one is, it is not considered as an MII. So here option B is right. Then question number 50, the tax which has not subsumed in GST. So which tax is not subsumed under GST? Excise duty, service tax, value-added tax or stamp duty. So here excise duty come under GST, service tax, value-added tax, these all are comes under GST, but stamp duty is not subsumed under GST. So option D is right. So here the tax which has not been summed into the goods and service tax is stamp duty. So stamp duty which is levied on the transaction involving legal documents such as property transaction remains outside the GST regime. So if the RBI tightens its policy, it generally means it is increasing interest rate. So here stamp duty which is levied on the transaction involving legal documents such as property transaction remain outside the GST regime. So option D is right. Then question number 51, which of the following effects will be seen on deposit rates if RBI tightens its policy? If RBI tightens its policy, then which of the following effect will be seen on the deposits rates? So first one is the deposits will increase. Yes, if RBI tightens its policy, the deposit rate will increase. How? Now, if the RBI tightens its policy, it generally means what? It is increasing interest rate. So it raises interest rate or reducing liquidity to control inflation or to stabilize the economy. So in this scenario, deposit rates are likely to increase because banks will need to offer higher rates so as to attract depositors due to higher borrowing cost. So here the correct option is the deposit rates will increase. So if RBI tightens its policy, rate of interest rise, so deposit rate also rise. Option A is right. Then question number 52, which of the following statements about Arrow's impossibility theorem is wrong? So we have to find out the wrong statement about the Arrow's impossibility theorem. So what is Arrow's impossibility theorem? Now Arrow's impossibility theorem actually demonstrates that no voting system can perfectly translate individual preferences into a collective decision while simultaneously satisfying a great set of desired criteria. So it shows that it's impossible to achieve a perfect voting system that meets all the criteria Arrow specified, like non-dictatorship, unanimity, independence of irrelevant alternatives, transitivity, etc. So when there are 3 or more options are available. So here according to Arrow's impossibility theorem, first one is Arrow's impossibility theorem is a social choice paradox illustrating the impossibility of having an ideal voting structure. This is right. Then question number 2, the problem of social choice can be satisfactorily solved by democratic voting. No, we cannot satisfactorily solve the democratic voting system under which social decisions are made by the majority decision. So according to Ayres impossibility theorem, we cannot solve the social choice by any type of democratic voting system. So B is incorrect. Then Arrow has proved a general theorem about the impossibility of constructing an ordering for society as a whole, which will in some way reflect all the individual orderings of the members who make up the society. This is right. Then option D, it states that a clear order of preferences cannot be determined while adhering to mandatory principles of fair voting procedure. This is also correct. So option A, C, D are correct according to Arrow's impossibility theorem, and wrong statement is option number B. So here option B is the right. According to our question, option B is the right option. Then question number 53. The translog production function is an approximation of CS function, Cobb-Douglas function, VES function, or none of this. So here question asks for the translog production function is an approximation of. So first one is translog. So translog production function is an approximation of CES production function. CES means constant elasticity of substitution. So translog is an approximation of CES function. Then question number 54. Dash cost is the cost that has already occurred and has no possibility for recovery in the future. So that cost which cannot recovered is called as sunk cost. That is called as sunk cost, which cost that we cannot recover. The cost that has already occurred and has no possibility for recovery in the future, it is called as sunk cost. So option B is right. Then question number 55. Choose the correct statement about Ricardo-Barrow effect. According to Ricardo-Barrow effect, we have to choose the correct statement. So first one is first we have to know what is the Ricardo-Barrow effect. So a Ricardian equivalence suggests that when a government increases debt finance spending, taxpayer anticipate future taxes to repay the debt and therefore save more, which offset the increase in aggregate demand. Thus, demand remains largely unchanged. Deposits increased government spending. So here first option is an economic theory that suggests that when a government tries to stimulate an economy by increasing debt financed government spending, aggregate demand will increase. So according to the Barrow effect, it is incorrect because thus demand remained largely unchanged. Deposit increase, government spending, so demand remain constant, it will not increase. Then second one, an economic theory that suggests that when a government tries to stimulate an economy by increasing debts finance government spending, demand remain unchanged. Yes, this is right, demand will remain unchanged. Then third one, taxpayer will save to pay the expected future tax that will tend to offset the macroeconomic effects of increased government spending. This is also correct because when Ricardian equivalence, it suggests that when a government increases debt finance spending, taxpayer anticipate future taxes to repay the debt and therefore they save more, which offset the increase in aggregate demand. Thus, demand remain largely unchanged despite increase in government spending. Then option 4, Ricardian equivalence maintains that government deficit spending is greater than spending out of current taxes. No, this is incorrect. So option 2 and 3 are correct. So option C is right. Then question number 56. Classical dichotomy implies that. A classical dichotomy means monetary sector influence real sector? No. Generally classical dichotomy. What is the meaning of classical dichotomy? Classical dichotomy is the concept in classical economics that real variables such as we can say output, employment, real variables are separate from nominal variables like money supply, price level. So real variables are separate from nominal variables, meaning monetary factors do not affect real economic outcomes in the long run. So monetary sector and real sector are independent, different. So according to classical dichotomy, monetary factor and real factors are independent. They are not related to each other. So option D is correct. Then question number 57. Who described the trade cycle as purely monetary phenomenon? So who described the trade cycle as purely monetary phenomenon? Schumpeter, Don Pattinin, Hattre, Milton Friedman. So according to Hattre described the trade cycle as purely monetary phenomenon. So Hattre emphasized that the trade cycle, or we can say business cycle, is primarily influenced by changes in the money supply and monetary policy. So this is the statement of Hattre. So Hattre described the trade cycle as purely monetary phenomenon. Then question number 58. Which of the following is not a practical consequence of multicollinearity? So which is not a practical consequence of multicollinearity. So question number 58. So multicollinearity means multicollinearity primarily affects the precision and reliability of coefficient estimates, making them less precise and potentially causing issues with hypothesis testing. So here, although blue best linear unbiased estimator, the OLS ordinary least square estimators have large variance and covariance, making precise estimation difficult. It is right. Then the confidence interval tend to be much wider, leading to acceptance of zero null hypothesis. This is also right according to multicollinearity. Then the T ratio of one or more coefficient tends to be statistically insignificant. This is also right. And option D, R square, the overall measure of goodness of fit, can be low. No, this is incorrect according to multicollinearity. However, R square, which measures the goodness of fit of the model, can still be high even in the presence of multicollinearity. It cannot be low. It remain high even in the presence of multicollinearity. So option D is right or wrong. A, B, C are correct. So we have to find out the not a precise consequences. So option D is right. Then question number 59. Which of the following statements are correct in respect of Niti Aayog, National Institution of Transforming India? Niti Aayog, which was formed in 2015. So it is a constitutional body, it is a statutory body, or it is neither a constitutional nor a statutory body. It is a repeated question from the previous year question, 2023 question. So it is also a repeat question. So here it is neither a constitutional nor a statutory body. It is a think tank. So option 3 and 4 are correct option. So Niti Aayog, it is neither a constitutional body nor a statutory body. It is a think tank and advisory body established by the Government of India to replace the Planning Commission in 2015. Then question number 60. The term yellow revolution is associated with. So the term yellow revolution is associated with milk production, production of oil seeds, white production, or production of eggs. So yellow revolution is related with production of oil seeds, milk production, white revolution, wheat revolution, rice. So here option B is the right option, but you have to know the revolutions which are related with different colors. So like black revolution, it is related to petroleum product. Blue revolution related with fish production. Brown revolution related with leather. golden revolution related with fruit or honey, green revolution related with food grains, we can say rice and wheat, and a gray revolution related with fertilizers, pink revolution related with onion, red revolution related with meat or tomato, silver revolution related with egg or poultry. So production of egg, it is related with silver revolution. Then white revolution related with milk or dairy production, white revolution. Then yellow revolution related with oil seeds, yellow revolution. Then evergreen revolution, it is related with overall development. So these are the colors and associated with different type of revolution. Then next question, question number 61. Knife edge equilibrium is associated with R.F. Harrod, John Robinson, Kalicki, or Romer. So knife edge equilibrium related with Harrod-Romer model. GA is equal to GW is equal to GN. Natural growth, actual growth, warranted growth, these all are equilibrium. When these all are equal, it is called as knife edge equilibrium. So it is related with R.F. Harrod. Then next question, 62. X efficiency measures. So X efficiency, it measures how close to allocate efficiency of a firm is operating in the market, or how close to optimal efficiency a firm is operating in a given market, or how a firm is operating in a given market, or any of the above. So here 62, X efficiency. So we have to know what is X efficiency. So X efficiency refers to the degree to which a firm is operating on the production possibility frontier and making the most efficient use of its resources given the constraint of the market environment. So here option number B is related with this concept. X efficiency measures how close to optimal efficiency a firm is operating in a given market. So 62's right option is B. Then question number 63, accession and reason. Accession is environmentally sound policies do not harm the environment or deplete the natural resources. So A is right. Environmentally sound policies do not harm the environment or deplete the natural resources. Then reason is sustainable development is critical of well-being of human society. So sustainable development is critical. No, it is incorrect. Sustainable development is critical to well-being of human society. No, it is incorrect. So here option 1 is correct. Option 2 is incorrect for the reason. So reason is incorrect, but statement is right. Sustainable development is critical to well-being of human society. It is right, but no, it is not the correct explanation for the accession. So here both A and R are correct, but R is not the correct explanation of A, because accession is correct because environmentally sound policies aim to protect the environment and avoid depleting natural resources. And reason, it is also correct because sustainable development is indeed crucial for the well-being of the human society. However, reason does not directly explain the accession. Rather, reason provide a broader concept for how environmentally sound policies are important. So option B is right here. Then question number 64, match list 1 with list 2. List 1, big push theory, critical minimum effort thesis, theory of unbalanced growth, low level of equilibrium type. These all are from the growth and development theory. Theory of big push, Rosenstein-Rodan. Critical minimum effort thesis given by Leverstein. Theory of unbalanced growth, Hirschman, and low level equilibrium trapped, Lenson. So 64's right option is A2, B4, C1 and D3. So option D is the right. Then question number 65, tragedy of commons implies. So what is tragedy of commons? So tragedy of commons, it implies, it describes a situation where individuals acting in their own self-interest deplete or spoil a shared resources, leading to its eventual degradation or destruction. So here tragedy of common, it implies the total destruction of public resources by overuse of it. So it is called as tragedy of commons. Generally we can found in public goods, tragedy of commons. Then question number 66, the environmental valuation method which can be applied to determine the value of loss of biodiversity. It is related with hedonic valuation, market valuation, contingent valuation, or travel cost method. So here it is related with contingent valuation method. Loss of biodiversity, it is applied to the determine the value of the loss of biodiversity is related with contingent valuation. So what is contingent valuation? Contingent valuation involves surveying individuals to determine their willingness to pay for specific environmental benefit or to avoid certain environmental losses such as the loss of biodiversity. So it is a survey method by which we can know their willingness to pay for specific environmental benefit or avoid certain environmental losses such as biodiversity, loss of biodiversity. So it is related with contingent valuation method. Then question number 67, capital adequacy ratio is the what is capital adequacy ratio? Capital adequacy ratio is the measure of a bank's available capital as a percentage of its risk weighted assets, ensuring that the bank has enough capital to absorb potential losses and continue operating. So according to the statement, capital adequacy ratio, it is the measure of how much capital a bank has available. So capital adequacy ratio means it is the measure of how much capital a bank has available. It is called as capital adequacy ratio. Then question number 68, balance budget multiplier is. Balance budget multiplier means it is a measure of change in aggregate production caused by equal changes in the government purchase and taxes. So equal changes, a measure of the change in aggregate production caused by equal changes in the government purchase and taxes. So it specifically measures the impact on aggregate production when the government increases its spending and raises taxes by the same amount, keeping the budget balanced. So it is called as balance budget multiplier. Then question number 69, Metzler paradox is the theoretical possibility that the imposition of a tariff on imports may provide days to the import competing industry. So according to Metzler paradox, it is the theoretical possibility that the imposition of a tariff on import may provide negative protection or no protection, but it cannot provide positive protection it cannot provide positive type of protection. It may provide no protection or negative protection. So Metzler paradox indicates that a tariff on import might not provide the expected protection to the import competing industry. In some cases, the overall economic effect of the tariff can lead to the situation where the industry doesn't receive any effective protection. So Metzler paradox, in certain scenarios, a tariff can reduce the protection for the import competing industry due to changes in prices and economic condition, potentially harming the industry rather than benefiting it. So we can say it may provide negative protection or it may not provide no protection. So here option A and C, maybe it may have no protection or sometime it can provide negative protection to the import competing industry. So here option A or C is the right option. So A or C is the right option. So but here option given for the A, B, C, D, so you have to choose one. So you can choose option C or either you can choose option A. So C is the most accurate, or we can also include A. Then question number 70, the notion of J curve implies that the devaluation of domestic currency So according to the J curve, the devaluation of domestic currency, what it represent? Initially, a devaluation can lead to a worsening of the trade balance as import price rise. So the shape of the curve is just like that, J curve. So initially devaluation can lead to a worsening of the trade balance as import prices rises and the volume of export takes time to increase. Over time, as the volume of export grows and imports decline, the trade balance is expected to improve and forming a J shape when plotted over time. First worsen, then improve. So it plotted as a J curve. So according to the question number 70, first worsen. So the notion of J curve implies that a devaluation of domestic currency first worsen the country's trade balance at first before improving. So option B is right. Then question number 71, snake in the tunnel refers to a system of European monetary cooperation in the 1970s which aimed at. So snake in the tunnel, what it refers? Snake in the tunnel. So it refers to it was designed to limit currency fluctuation within a nation band among European countries while allowing for more flexibilities among non-European currencies. So here snake in the tunnel, it refers to a system of European monetary cooperation in the 1970s which aimed at limiting fluctuations between different European currencies. So option number A is right. Then question number 72. Question number 72. Mary's model theory of firm is a dash sales maximization model, managerial discretion model, managerial enterprise model, or limit price model. So according to question number 72, it is called as managerial enterprise model. Mary's model theory of firm, it is a managerial enterprise model. So it highlights the balance between the growth of the firm and the managerial control, focusing on how managers aim to maximize their utility through firm growth while maintaining their control over the firms. So it is called as managerial enterprise model. Then question number 73. If elasticity of substitution is equal to 0, CES production function will assume the form of Cobb-Douglas production function, linear production function, Leontief production function, VES production function. So question asks for when if elasticity of substitution is equal to 0, then CES, constant elasticity of substitution production function, will assume the form of Leontief production function, because if elasticity of substitution is equal to 0, then CS production function it assume like complementary goods. So when elasticity of substitution is 0, it indicates that inputs are used in fixed proportion. Because elasticity of substitution is 0, then we can say that it indicates that inputs are used in fixed proportion, which characterized the Leontief production function. In this case, inputs cannot substituted for each other at all. So here inputs cannot substituted for each other. So we can say that inputs are used in fixed proportion. So in Leontief production function, inputs are used in fixed proportion. So here option C is the right option. Then question number 74. The return to scale exhibit by a firm having a production function Q is equal to 6k to the power 0.3 L to the power 0.7 will be. This is a Cobb-Douglas production function. So Q is equal to AL alpha into k to the power beta. So if alpha plus beta value is equal to 1, constant, greater than 1 increasing, less than 1 it shows decreasing. So here alpha plus beta, alpha and beta's value, alpha is equal to 0.7 and beta's value is equal to 0.4. So 0.4, 0.7. So alpha plus beta value 7 plus 4 1 11 means 1.1. So here the value comes 1.1. If alpha plus beta's value greater than 1, it is called as increasing function. So if alpha and beta's value greater than 1, then it indicates as increasing function. If alpha plus beta value less than 1, decreasing, and if alpha plus beta equal to 1, it indicates as constant function. So here alpha plus beta's value greater than 1, 1.1, it is greater than 1, so it is a increasing function. Then according to the question number 75, Stackelberg equilibrium is reached under duopoly when Stackelberg equilibrium is reached. Both firms sophisticated and both want to leader, both firms sophisticated, both want to follower. No, one leader, one follower. So one firm is sophisticated and becomes the leader, and other firm is naive or followers. So here in Stackelberg equilibrium is reached under the duopoly when one firm is the leader and other firm is the follower. Then Stackelberg model, one firm acts as the leader, choosing its output level first, while the other firms, the followers, reacts to the leader's decision. Here the leader's advantage comes from being able to set its output level first and anticipate the follower's response. So here option C is the right option. Then question number 76. As per Tobin's asset demand for money, the demand for money depends on. So as per Tobin's asset demand for money, the demand for money depends on the risks and return associated with the money and other forms of asset, not with the individual expectation. So this is the right option according to Tobin's asset demand for money. So what is Tobin's asset demand for money? Tobin's theory, it points that the demand for money is influenced by the risks and return associated with both money and other assets, as well as individuals' expectations about these factors. So here the risks and return associated with the money and other forms of asset, not with the individual expectation. So option number A is the right option. Then question number 77. The Sahoo growth model shows that in the long run, as economy's rate of death, according to Sahoo model, what happened? So according to Sahoo model, Sahoo growth model shows that in the long run, as economy's rate of saving determines the capital stock and level of output. So here option B is the right option according to Sahoo model. So according to Sahoo, in the Sahoo growth model, the saving rate influences the steady state level of capital stock and consequently the level of output. Here the model demonstrates that higher saving lead to a higher capital stock and output in the long run, but it doesn't affect the long term growth rate, which is determined by exogenous factors such as technological progress. So according to the Sahoo growth model, it shows that in the long run, an economy's rate of saving determines the capital stock and level of output. So option B is right here. Then question number 78. A decrease in tax may shift the IS curve to. When a decrease in tax, what is the shape of the IS curve? So IS curve shift to the right or left. So here IS curve shift to the right, equivalent to the del T, which represent MPC by 1 minus MPC. So option D is the right option, and decrease in tax may shift the IS curve to the right, equivalent to the del T, which is MPC by 1 minus MPC. It means when taxes decrease, disposable income increases. When taxes decreases, disposable income it increases, leading to higher consumption. It leads to higher consumption. Then the shift in the IS curve to the right, shift in the IS curve to the right, what it determined? It determined by marginal propensity to consume. It determined by MPC, marginal propensity to consume, and the tax multiplier, which is del T, tax multiplier del T into MPC by 1 minus MPC. Here del T into MPC by 1 minus MPC. So it is right equivalent to the del T into MPC by 1 minus MPC. So D is the right option here. D, option D. Then question number 79. The arithmetic mean of regression coefficient is always, the arithmetic mean of regression coefficient is always equal or greater than the coefficient of correlation. So the arithmetic mean of regression coefficient is always equal, either equal or greater than the coefficient of correlation. So here option B is right. The arithmetic mean of the two regression coefficient bxy, one is bxy, other one is byx. These are two regression coefficient, is always equal or greater than the coefficient of correlation. Coefficient correlation is equal to R. So this relationship arises because the correlation coefficient represents the strength and direction of the linear relationship between two variables, while the regression coefficient reflects the slopes of the regression line. So it is either equal or greater than the coefficient of correlation. Then question number 80, today's last question. The flexible inflation target FIT was adopted in the year. Flexible inflation target was adopted in the year 2016. So here option C is right. What is flexible inflation target? India officially adopted the flexible inflation target framework in 2016, where the Reserve Bank of India (RBI) is tasked with maintaining inflation at a target level of 4% with a tolerance band of plus and minus 2. So inflation target is 4% and with a tolerance level either plus or minus 2%. So it may be, inflation may be 4 plus 2 is equal to 6% or 4 minus 2 is equal to 2%. So here inflation in India will range from 2%, minimum 2% to maximum 6%. So it is the target. So the medium range is maintaining inflation target level is 4%, but maximum and minimum we may increase plus 2% or decrease minus 2%. So it ranges from 2 to 6%. So it is called as flexible inflation target. It was adopted in 2016. So option number C is right. So this is all about for the today's session. I hope you all like the video. If you like, please give your comments so that I know what type of video you want. So you openly comment in the comment section, and just share with your friends so that all are getting benefit from this video. So this is your part 2, and in the last part we are going to discuss from question number 81 to 120. So those who come for the first time, please subscribe to this channel for more such updates, and those who do not watch the previous videos, please watch in the playlist. I have given the link in the description, so you can watch all the previous videos of Kerala set. And in the next video we are going to complete this 2022 July session. So thank you all. Jai Jagannath.